Okay, this is going to be a pretty long video, so get yourself prepared. If you are kind of tired, you may want to look at this one because this one will definitely put you to sleep. You'll probably need to look at this video a couple times just to comprehend all the moving parts that's happening in this video. So let's jump in. We're talking about financial aid. We're going to look at college leveraging, FAFSA, and appeal letters. But in order for us to get any of that stuff taken care of, we've got to determine something that's called your EFC. That's your expected family contribution. So we have comprehensive software that we use in order to put this together. For those families, it's us determining if you are the head of household, are you married, are you not married, you're doing an individual tax return, are you separated, what percentage of custody do you have of your child. All those things tie in, and then we basically just do an estimated amount of the last tax year, so we can do that there, and then we go down, and there's other things that you can get that are kind of like exemptions. If the person has a blind parent or a spouse, or a student is blind, or over the age of 65 parent, they qualify for more things there in regards to where the AFC is different. So I won't just automatically say you're going to qualify for more, but it's a high probability that you're going to get some benefits because of that. Then we go in here and we put in the adjusted gross income for the parent. So we'll go in there and put in the name of the company and how much income they make. If they get an advanced EIC payment, which is kind of like being able to get kind of bonuses and things of that sort. Dependent care, you can write off those things against your adjusted gross income. If you have maybe students in private school, those are things we can kind of have a conversation with you about. And so once you do all that stuff, you'll come back out and then you'll see that you have your adjusted gross income of whatever that is, self-employment income, W-2 income, what have you. And so then you put in any adjustments and all that stuff there, and then exemptions that you claim. So we put those down for you, and then standard deductions or itemized deductions, how you go about doing all that. So we help you do all those things. If you're here in Kansas City, we meet with families individually. If you're in our scholarship program, which is an ACT program, then we can actually do this for you as well, part of that program. And then you go here and you look at untaxed income that could be coming from an estate, an inheritance, what have you. So we look at that, and then under asset protection allowance, this is critical. Your asset protection allowance is basically money that you may have in cash savings accounts, current net worth investment statements. We can go through all that nerdy stuff with you, but it's basically $1,000 for every year of your age that will allow you to stay with under the asset protection allowance. Any dollar that goes over that is actually could possibly, I got to be very careful what I say here, could possibly disqualify you for financial aid. So you definitely want to make sure you're on top of your game on that. I do know of a family that actually put down a rental property, and that rental property could have been put into the name of the company, and it could have been shielded under the company's name and not in the name of the family. So those are things that, because the company could have owned it. So it's just little things like that that you need to know more information about. Asset protection allowance now going under the child. Basically, we want to make sure that we look at the student's income. What kind of income did they earn? Their asset protection allowance is zero from the child's assets. So you definitely want to make sure you do things to try to maximize financial aid in regards to the student. Base year is January of the student's junior year, going into there could be a junior, but going into January of their junior year's base year. That's the year that the colleges will look back to see if there's been any last minute changes in the financial affairs of the family. So definitely want to make sure that you make any changes before then. And then if you go in here, you'll see that the family's expected contribution is here. We calculate that for you, and then that's FM, and that's federal methodology, and IM is private schools, institutional methodology. And then under your EFC, you'll see that there. So what we do here is we go in and we will now go into the 8 eligibility reports, and we'll pick out the top 5 colleges, and we'll run those reports from there. I'm going to actually go ahead now and just pull down the report so you can see the 8 eligibility report here, and I'm going to break out of that, And then if you come here, you'll see that Vanderbilt is one, Tennessee is another one. And so as you can tell, this is a private school, this is a public school. The total cost of attendance is $62,000 for the private, and the public is $47,610. Their inflationary factor is just 5% a year, and then you can actually now take that number and move it up to $65,000 because it's going up at 5% a year. 47 went to 49. And then the EFC for the family, what the government says they have to pay based upon income and assets, is $9,080. And so what I'm going to do real quick is go back over so we can take a peek at the EFC, and then we'll come back over to the report. And so the EFC, and this is just a sample person that we ran something for, it's not an actual parent family. But if you come here, 77,000 is the AGI after, I guess, some exclusions that were there, and then they took out all these other exclusions that are kind of like deductions, which took their available income down. And then you look at the asset protection allowance and the reserve allowance and all those things, which takes that EFC down to 10,000 for a federal school, and for a private school is actually 9,000. So that's how they came up with the EFC. Okay, and so then going back over to the eligibility report, you can see that the public school is 10 and then the private school is 9. So I think I may have set that in reverse on the other portion, but to keep it moving forward, the average amount of financial aid that the private school gives is actually 100%. And if you see, the public school gives 60%. So we can look at all the national data that they post out there, which is public information. We just extract it and put it into these reports. And so if you go out here, you can see those. They're eligible. They need 56,000. They're going to get 56. They need 39,000. They're only getting 23. So the shortfall between the 39 and the 23 is about 15,000. So their immediate out-of-pocket cost to go down here to Vanderbilt, if I'm not mistaken, is actually 9,080, which is their EFC, and their immediate out-of-pocket cost is going to be that 10,000 plus that 15,948. So they're coming out of their pocket 26,000 to go to the public school, as opposed to 9,000 to go to the private school. So if you looked at the 62 compared to the 47, you would have thought this school would have cost more. But if you come down here and look at the total finality of the financial aid award package, you'll see that those numbers are totally different. I mean, this is almost 3 times more here, even though the cost was actually cheaper. So it's how much money you got to pay, not how much it costs. So, and then look at the graduation rates. They got a 4-year graduation rate of 87% and 37%. So what we want you to do is kind of take a peek at the reports that we provide. There's another report for those students that actually are in our accelerated program. It is a admission report, so I'll go over that real quick. It's a hyper handbook that we do. So let me go one more step over so I can break that down. I believe it's under the details. And so again, if you're in this program, we'll run these reports for every school you're interested in, but it'll break down all the admission criteria, the contact information, all the information here in regards to the ACT test that's required, SAT, the GPA that's needed. It should be out there somewhere. There's a $50 application fee. So I mean, all that information we have in our reports that we do for you upon your request. And I'm trying to read through there and see if they have a minimum GPA. I don't see that. Let's keep going down. Admission procedure for the fall and the spring, freshmen. Interesting, they don't have, they got their expenses, financial aid, scholarships and grants that they have at the institutional level. They got some pretty nice size scholarships, which you saw from the report, extracurricular activities and all that stuff. So we run those. Academic requirements, there it is. Core curriculum, freshmen must maintain a 1.8, sophomores 1.9, juniors 2.0, 2.0. So interesting. So that's data that's on Vanderbilt, and again, we can run that for every school. I'll pull up another one real quick so you can see that. So we'll close that out, and I'll go under Tennessee, and so we'll go there, and you'll see that they're admission. You got to have a 2.0, $40 application fee, and it breaks down all the information. I mean, you can go out and try to spend all your time researching all this stuff on your own, or you can just have us do it for you. So it's totally up to you how you want to proceed with that. So I'm going to close that out and come back over to the next step. So once you kind of got a good feel for what your EFC looks like and all that stuff, then the next step you want to take is, trying to get a feel for how to handle the FAFSA. So we provide a FAFSA Answer Key to the families. This FAFSA Answer Key basically breaks down everything. You can put in your name and all that information in there. As you do, it's telling you which line of the FAFSA that information goes to. So when you print this out, you can fill out your FAFSA and it's telling you, okay, that Clark goes on line 1, middle initial line 2, line 3, yes on line 25, 29, 35. It's walking you all the way through how to get that done. So we provide that FAFSA Answer Key to you. And then once you start getting award letters back, those award letters look like this. So this is one of the national students. They had an award letter from Dartmouth. They basically got $56,000 in scholarships. Total cost of attendance. I apologize. Total cost of attendance. And so they family had to come up with $50,000. They were getting $6,000 in scholarships. If you come down here, they use an appeal letter process, and the actual scholarship went from $6,000 from the General Scholarship Fund and Federal Work Study. It went from $6,000 to $34,000. So they use an appeal process. The appeal process is in the software, even if you're not in that accelerated program, which is an ACT program, and some other coaching. But if you're just coming out, if you go under your profile and you go under files, you'll see here, it's going to take you over here. You can upload files if you want to, but the appeal letter is here. Okay, I've already downloaded it, so I've got it here. It basically states Director of Admissions, and you put the name of the college, dear whoever, not gatekeeper, but whoever. I personally want to thank you for a quick response to my application for financial aid at the University of although I'm happy I received my award letter, and then you attach those other award letters from those other schools, and then try to leverage those award letters to get more money out of the financial institution. So that's pretty much it. I did want to just hit on those three. We do a lot more comprehensive work with those families that want to go a little bit further in making sure that their child has more support. So we will explain that in another webinar, but I did want to give you an overview of how to go about understanding the college leveraging FAFSA and the appeal letters. Have a great day. Keep up the amazing work, you guys. Keep it up.